Let's talk about inflation because reports showed some positives and, well, some negatives as well. The July Consumer Price Index, also known as the CPI, showed an annual increase of 2.7%, which was in line with June's reading and below the expectation of 2.8%. The headline number was helped by energy, which showed an annual decline of 1.6%, largely thanks to a decline of 9.5% for gasoline. And we know that gasoline, except for in California, is declining quite a bit across the country.
Yeah, and the unfortunate thing is that won't be repeating probably next year. I don't think you're going to see another 10% decline in gasoline, but I mean, you never know. But I was kind of surprised by this. I haven't really broken this down before, but energy services were not as favorable when you looked inside the energy reading for CPI, as they increased 5.5% for electricity and 13.8% for utility piped gas service. I do wonder if the power demand for these large data centers is starting to put a strain on the grid, and I worry this could become even more problematic. I mean, we're talking about all the billions and billions of dollars that these large companies are plowing into data centers. They're not all built yet.
No.
I mean, I feel like they're coming up with this idea before really considering how are we going to power this stuff?
Yeah.
And I was reading this article the other day about people are not going to be happy if the power responsibility falls on them to power the data centers. If their electricity bills go up because they're near a data center, I don't think they're going to be too stoked on that. It's like, oh yeah, Meta and Microsoft, you make all these billions of dollars, and my electricity bill went up 15%. Thanks.
And it is true because you don't really think about it. I mean, electricity up 5.5%, natural gas, gas service up 13.8. There's times now like, I'm not going to take that jacuzzi because I know it's all natural gas. And it bugs me when I see how much it's increased over the years now. And you're right. It may only get worse going forward.
They got to come up with a plan for it. I don't know what it is, but I did read some maybe municipalities, some of the larger utility companies are maybe having direct negotiations with the Metas, the Microsofts, and saying, maybe they're going to have to pay a different price for electricity than their residents. Because, again, they don't want to piss off their constituents and be like, oh, yeah, we're bringing this data center here to create all these jobs, but also, we screwed you over on the electricity side. So, I mean, I think there is going to be some negotiations, some potential changes that occur, because we know that demand for electricity and power is going to go up because of these data centers.
Yeah, and there should be maybe a top tier that you're using all this energy, we're going to charge you a lot more.
Yeah.
So, but let's talk about the core CPI because that does exclude food and energy. Well, it was up 3.1% from a year ago and was slightly above the forecast of 3%. This was a slight increase from the 2.9% level in June and the highest annual increase since February. Surprisingly, shelter, we've talked about this every month, I think, for the last 24 months, continues to be a large reason for the elevated inflation rate, as it was still up 3.7% compared to last year. I know it's getting better, but it's still there, and it makes no sense.
Yeah, and I was reading this other thing in Barron's this last week, and they were talking about how the CPI was calculated, I think it was in the 80s, and they didn't include the owner's equivalent rent, which we've kind of been questioning, I'd say. And they didn't talk about what inflation would look like now, but they talked about like inflation back in 2021 or 2022, whenever it got really bad and we hit 9.1% on CPI. If you would have calculated it based off the 80s when you used home prices, it would have been like 19%. And I bring that up because I think we're on the inverse of that now. If you were to actually include the way we calculated inflation in the 80s, home prices are not up 3.7% compared to last year. So you would actually probably have a more subdued inflation report. But, you kind of have your puts and takes with how you calculate inflation. It's just maybe not as bad as the headlines and the core is showing, because I think that shelter, as we've said for many months, is somewhat skewed.
Yep.
Also, we talk about tariffs. If you didn't know, tariffs have been a pretty hot topic.
Oh, yeah.
So they still, though, they appear to be subdued. I mean, I was kind of looking at different areas. I mean, furniture, that was up 7.6% compared to last year. So that is something that maybe is being impacted from the tariffs. A lot of foreign, manufacturing for furniture. So that could have been an area. But other areas like apparel and new vehicles, those saw little change. New vehicle prices are up just 0.4%, and apparel prices are actually lower by 0.2%. Again, two big categories that have, I'd say, more foreign exposure than other products.
And that's one thing that surprises me, those numbers as well. You have to ask, who's absorbing these tariffs? Is it the company? Is it the consumer? Obviously, this shows not the consumer on cars yet, but someone's absorbing those costs, which eventually will be passed on. I mean, usually they're just not going to thin air, so that does worry me. And I did see an economist point out the fact that core goods inflation on an annual basis registered the largest growth in over 2 years. But at 1.2%, I wouldn't say that it's putting a strain on the economy at this point in time.
Yeah, I just think it's so interesting because, the tariffs. And, I've kind of talked about this before, how we're a service-driven economy, not a goods-driven economy. So you're seeing, again, at 1.2%. We had 1.2% inflation on the whole economy. We'd be in a great spot. And I was actually surprised, too. I mean, because the president talked about how he wasn't happy with Goldman Sachs and their kind of modeling on the economy. But I dug into the report, and even with their numbers, it was kind of strange. It wasn't that bad. They talked about how tariffs might cause a 3.2% core PCE when in June, it was at 2.8. That 3.2% level was by the end of the year. So again, you're talking about how awful maybe these tariffs could be, and core PCE would still only be 3.2%. It's just not a big enough part of our economy. If we were a heavily driven import-based or country for goods, that would be a problem. But we are so service-heavy, I don't think it's moving the needle as much as people thought it would.
Yeah, and then we talk about Producer Price Index, the PPI, which is known as PPI, had a big headline miss as a monthly increase of 0.9%, greatly exceeding the expectation of 0.2%. This is something that, when we question, maybe perhaps they're absorbing the tariffs. That's why they're seeing the inflation not passing to consumers yet. But I was surprised at that. I was surprised, but I wasn't surprised. I guess.
I was somewhat surprised by it. But again, I think maybe you will see some of that flow through to consumers by the end of the year. But again, even looking at Goldman, they said they think consumers will absorb, I think it was like 2/3 of the tariffs by the end of the year. But that's why even that inflation rate, 3.2, is not that bad. But I mean, when you look at PPI, that monthly headline was what made the news, but you look at annual gains of 3.3% for the headline and 2.8% for core PPI, it just doesn't look that problematic. And again, goods inflation for the month was 0.7%. It's services what really drove the miss in my mind, as it increased 1.1%. But one of the main areas was portfolio management fees surged 5.4%. I can guarantee you, portfolio management fees have nothing to do with tariffs. That's because the stock market went up so much in the month.
And I'm looking at that. Did we increase our portfolio management fees? I think we stayed the same fee for how many years?
Well, but no, because the stock market goes up.
Oh,
so
okay.
you're seeing that big surge. And I mean, I'll tell you, we didn't have as good as a month as a lot of people in tech. So if you were all in NVIDIA and all the tech stuff, and again, we've talked about our concerns there, but a lot of people saw a nice increase last month because of their exposure to technology.
That's interesting. Yeah. And again, we always say, when our clients do better, we do better. So we do make more.
And I did want to say one last thing.
Sure.
I don't know if you're going to hit the retail sales.
Yeah.
Okay. Perfect.
Yeah, July retail sales showed a nice gain of 3.9% compared to last year. And that was even more impressive when excluding, this is amazing, a decline of 2.9% at gasoline stations, as growth was 4.5%. And then food services and drinking places, gosh, I'm surprised at this, advanced 5.6%. Well, people are still out there spending money. They're doing great.
And, when I saw CPI, I was like, I think the Fed should definitely cut in September. And I think maybe 2-3 cuts by the end of the year. And then you get this retail sales data, and you're like, but the economy is actually still doing pretty well. Yeah. I can see why some Federal Reserve members are skeptical of cutting. But then you have to kind of balance, well, you don't want to cut after you're in a recession. Right. You want to try and beat the curve. So, I mean, I see the argument to both sides on if it makes sense to cut or if it doesn't make sense to cut in September. I kind of would like to see, I guess, more data in September before that Fed meeting, but markets basically have it priced at 100% right now that they're cutting in September. It'd be very bad for the market if they did not cut.
And I think with the retail sales growing 3.9%, I'd say, you know what? I wouldn't, if I was on the board, I don't think I'd be cutting. Now, if it gets down to 0, 1%, because I don't think it's going to reverse dramatically from 3.9% down to -4. Yeah. But I think I'd want to see it a little bit lower. We will see what they come up with. But I see the point for not cutting.
Yeah, I agree. And I hate to say that because I've been so adamant that I think they should cut. But, I mean, that's why you continue to look at data and you can have a fresh opinion. And, you got to change as the data changes. And right now I'm not going to say I'm like, oh, they definitely shouldn't cut. But I think I would go either way. I mean, it's kind of nice. You have the dissents on the
Yeah.
Fed right now, and then you have the people that don't want to cut. Because I think you have people like myself that's maybe 50-50, and they could be swayed either way based off the arguments made.
Yeah, yeah, and
Which is good.
And what I look at too, if you cut, you've used up one or two of your bullets already.
Yeah.
And I think we're gonna save those until things get pretty bad.